What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and the trading method that we use can be implemented with any company that's traded in the U.S. stock market. So if you are new to this channel, make sure you hit that subscribe button and that notification bell. That way you're alerted to when we release new videos. And if you enjoyed this video, make sure you hit that like button. It always helps the channel grow. Thanks to those who continue to tune in. We love having you here. So for these nightly and weekend videos, like we mentioned, they mostly focus on identifying triggers and targets for trades, ranging from scalps and intraday trades all the way up to swings or leap trades. And so if you do want a deeper dive into how we set up our charts, the broadening formations, the color coding, things of that nature, make sure you check out the bonus content on our YouTube page. So I do encourage you all to watch the full video. We do go over triggers and targets, but we give some pretty good insight into the price action on all time frames. So let's go ahead and take a look at the agenda for today. First, we will recap the price action from Wednesday, December 3rd. Take a look at things and where we could have got entries and exits. Then we'll zoom out like we normally do and take a look at the week, month, quarter, and year price action. After we do that, we will zoom back in to set our 4-hour markers for Thursday, and as well as our triggers and targets for Thursday. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year. Okay. Let's go ahead and look at the intraday price action for today. First, looking at the 5-minute time chart like we always do. We'd like to look for scalping opportunities or early entry opportunities for day trades early in the morning using a proven and repeatable strategy like we mentioned earlier, and that is by identifying the opening print or the first traded trade price of the day and looking for higher lows above that opening print to get into calls, and looking for lower highs below the opening print to get into puts. Right? There is some nuance that can you can bring into the equation, especially if you're more familiar with this strategy and you have experience with it and you do understand charts on a pretty good level. Today was one of those nuanced days, right? So we had the opening print here at 44.42, and we pushed down, right? We pushed down to exactly to the overnight low, and we bounced exactly off of the overnight low. That's why we have the overnight low in as one of our 4-hour markers. And let me just rewind for a second and kind of zoom out just so that we can identify the 4-hour markers that we have on the chart here. And that is the overnight high, previous high a day, opening print, overnight low, and previous low a day. Those are everything you need for to guide you through this repeatable strategy, right? So let's go ahead and look back at today's price action, right? So we pushed down to the overnight low, we bounced there, and on the 5-minute we did make a 3-2 down combo 2 up. So the magnitude for that move is the high of the 3. So that's where part of the nuance can come in. Number one, we're bouncing off an overnight low, and number two, we are triggering a 3-2 down combo 2 up strat, right? From there, we see we get a higher low, get the higher high. So if you wanted to wait for a higher low, and again, this is more risk, right? This is the nuance part because we're below opening print, and you're not usually looking for calls below opening print, but we're bouncing off of a pretty major level, right? We've got the 100%, 100% fib retracement of extension Fibonacci level of October's range, right? That's right here, this major level. And then we've got overnight low, another major level from an intraday perspective, right? So we bounce there, we get the higher low, and then we get the higher high. So you could have entered calls right here. Again, more risk because we're below opening print. You obviously feel a lot better once we get above opening print, but this could be your early entry, right? We push back up to previous high a day, and we pull back a little bit and make a higher low. So if you wanted to look for a higher low closer to opening print, this could have been it for you. There was another higher low here, higher high. Now we did make a lower low here, right? Lower high, lower low. So that's the start of a downtrend on the 5-minute. So if you had your stop here, boom, you get stopped out, minimal loss. If you had your stop here, you don't even get stopped out. Well, it depends on how you're playing it. If you're playing this at your as your stop loss, right? If you entered here and you say this is the most you want to risk before exiting, right? Because if you're just looking at it from a scalping perspective, then your stop would have been down here, so you never would have got stopped out. But if you were following just a higher high, lower low, higher high, higher low, or lower high, lower low pattern for trends, then you would have got stopped out here. If you lost anything, it would have been minimal. But that's why we stay active. We keep a look at the charts, and we see a second higher low here, right at the opening print. And so once we broke the high of this previous high, then you could have entered, right? We push up, we make an equal low here, literally equal to the cent, and then we continue our push up, right? If you say you got stopped out here, the spreads are getting kind of crazy on SOXL lately. Volatility is up. So if say your stop got hit because of the spread, maybe right here, that's fine. You get another higher low here, higher high. There's another higher low here. So you could have re-entered anywhere around previous high a day, which is also another major level that you want to have on the board from an intraday perspective. If we look at things from the 15-minute, right? Let's get just today on the chart. 15-minute, that equal low right here, right? Equal low. It never actually made a lower low. Like on the 5-minute during this push down, it made a lower high, lower low, which could have bumped you out of your position. So if you had switched to the 15-minute, or you should have multiple time frames up at once if you can. But if you entered, like we talked about, either the early entry or even right at opening print right here, if you would be looking at your 15, you could see that, okay, we're just making a higher low here on the 15. So maybe that would have kept you in your contracts. But either way, there's multiple ways you could have made money on this push up today, multiple entries that you could have had, even if you had to exit for, stops at even or even slight losses early on in the morning. We still stayed around that opening print level, and we were able to get the correct triggers to get that to get an entry to remain in there. So we fell in the camp of being stopped out early, right? So we entered. We didn't enter the early entry. Let's go back to the 5-minute. We didn't enter on this higher low. We entered on this higher low. It was closer to the opening print. So we did push up, and when we made the soft higher low here, we moved our stop up. Now, we were trying to protect things. We're thinking that there's probably going to be some type of pullback here sometime soon, right? We've been just going to up higher high from a candle to candle perspective every day for multiple days. So you've got to at least expect that there could be some type of pullback. So, right, we've already got our longer term swings or mid and long term swings, the January 26 calls and up. So obviously we're staying in those, but the scalp play, the short term intraday play, you may want to have a little tighter stop on it so things don't run away from you, right? So we did get stopped out here. We waited for the higher low here. We got in again, and we did not get stopped out here, right? Our stop was low enough here that the equal low did not stop us out, and we continued to push up, right? So we ended up making a good little chunk of money today. Sold all but 2 of the intraday contracts we had for next Friday. We are swinging 2 of those, and we'll see how things end up. We're in good enough profit that we've got a nice cushion, and we've taken enough profit already that even if these do pull back and we have to take less profit or maybe even stop out at even, it's not a big deal. We've still made money on the move, right? So we looked at things on the 5-minute, 15-minute, on the 1 hour. Let's get a cleaner chart here. On the 1 hour, you can see that we had the higher low here yesterday, and then today we had another soft higher low here. So this uptrend on the 1 hour is still intact, higher high. So nothing really to worry about from a trend perspective on the 1 hour. 4 hour, same type of thing. We had a solid higher low here, soft higher low here, another soft higher low here. And that's kind of what's playing into our, being wary of being too long in the short term, right? We're coming into some major levels. We've talked about this level for months now, it seems like, but the 50% level of 2024, that's been a major level of resistance for us previously when we pushed to the highs, right? It was resistance, finally kind of broke through, but was still kind of hanging on as resistance, took a gap up to get above it, but then obviously pulled back down to it, slight bounce off of it, but went back below it, and then was resistance, essentially resistance again here. So you can see how this could be a good level of resistance. We've got this weekly broadening formation coming through here as well, this purple line going diagonally from bottom left to upper right. That's a weekly broadening formation. Market makers expected move high was up here at 45.44. Again, we talk about how that's not an end all be all, but it is a point of inflection. And if you just look to the left, you can see how that level is a point of inflection. So we don't want to get too far ahead of ourselves, basically, right now. And, just maintain the mid and long-term positions that we have and, play the day-to-day until we can get a solid higher low on the 4 hour. And really, I'd like one on the day. It's kind of hard to go too heavy on the short term, right? Because of the levels that we're running into and because we don't have any solid higher lows. But, if depending on your risk level, you may feel like swinging shorter term contracts with heavier positions at these levels, feeling that we, might break through. There is a saying that the more times a level is tested, the more, the higher chance that it is to break. So if we've tested this level enough, we may just shoot through it. But also something to keep in mind, we did have a 3 in the first 4 hour candle of today. And obviously went 2 up. Now, it was a very solid 2 up. It's not like it was a failed 2 up or an inverted hammer or anything like that, but it remains to be seen. We could still have a 3, 2 up, 2 down on our hands. You never know. We could push down in the overnight. Just looking at the charts now, yeah, we're already down 50 cents from close. So let's see. Close was here at 46.58, sorry, and it's down here at 46. So already chopped half of this candle in half, basically. So if we do continue to push down through the overnight, if we open towards the bottom third or bottom half of the second 4 hour candle from Wednesday, then there's a good, I don't want to say a good chance, but there is a possibility, a probability that there could be a 3, 2 up, 2 down reversal, right? Now, the magnitude for that would just be the previous low a day, which is the low of the 3. We could bounce there, but that could be the solid 2 down that we need. Maybe we get a hammer, right? Pushes down and then hammers back up at the end of the day. That would be the solid higher low that I would be looking for, right? Same with the day, right? We just keep going 2 up, 2 up, 2 up, 2 up, 2 up, 2 up. We need some type of retest of a level to confirm support. It could be this level that we just broke through today, right? If you look to the left, this was resistance yesterday. We broke through it. So, we could be out of there now. But just want to keep in mind that there is still a decent chance for a pullback, right? Running into the levels that we're running into right now. I guess that's enough for the day. Let's kind of zoom out for the week chart. Let's get a cleaner chart out here. And we can see, right, we've talked about this all week this week and at the end of last week when we went 2 up. When we went 2 up last week, that locked this the candle from 2 weeks ago in as a higher low on the week time frame, bouncing off of that 11-week range that we were in from 24 to 28. So the uptrend continues on the week chart. Really looking for a higher high to confirm the uptrend as well, because there is still the possibility that we put in a lower high here, and if we start turning back down, that could be actually the start of a downtrend, right? If we put in a lower high, and put in a lower low, obviously that's the start of a downtrend. Even if we put in a lower high and a higher low, then at the very least we're going through consolidation. So again, that's why I talk about not getting too heavy with the shorter term contracts, the contracts expiring in the December monthly or shorter. just because we might have a little pullback to deal with here before we continue to push up. But again, running into the 50% level of 2024 was resistance before, so we'll see how we handle it now that we're back at that level. Yeah, things are still just looking pretty good from a week perspective. Not much to say past what I said yesterday. Kind of just starting to sound like a broken record because of the days that we've been having, just going two up, just straight bouncing off of the year flip level, right? That 2813 level, which brings us to the month chart, where it looks like last month could be a higher low, right? Got a little bit more to go. The high of last month was 5019, but SOXL could do that in 2 days, right? If we pass 5019, then we're obviously two up on the month, locking in last month in as a higher low, and right, following this higher low here could be the start of the uptrend on the month chart. That brings us to the quarter as well, because as we started to drop last month, that did make this quarter candle more of an inverted hammer, or not so much yeah, it was an inverted hammer at one point. We do have the wick down here, but with that inverted hammer structure, we were threatening a lower high on the quarter, depending on how the year ended, giving could have gave us a high probability chance of actually going two down in the first quarter of 2026 to start a downtrend, because again, we're coming from a lower low in the trend count. If this was a lower high, then obviously that would be the start of a downtrend. But we've pushed right back up. We're getting back towards the top of the candle for the quarter, and we're still in force with this one combo two down, combo two up, right? Just need to stay above this 3615 level, and we're still looking good. The year, right? We just have one objective, right? Close towards the top of as close to the top of the candle as we can, right? Because obviously we had the 1 2 up 2 down to start the year, but we were able to put in a higher low in April there at that 723, pushing back up. If we can close at the top of this candle, then we have a high chance of next year going 2 up, and that would lock in a 2 down 2 up reversal with the magnitude of 7008. So 7008 is that magic number. It's still coming into play on the quarter and the year, and starting to come into the picture on the month as well. So that is the ultimate target for this particular move that we're in right now from a higher time frame perspective. But once we reach that level, obviously there's more room to go. That's not even an all-time high. So all-time high would be the next target to shoot for, and then obviously we've got some Fibonacci extensions from that bull flag that we had from April through August, right? So that's a look at the higher time frame. Let's go ahead and zoom back in and look at things for tomorrow. Oops, there we go. We'll just look at the scalping perspective first, like we normally do. Can we get previous? There we go. All right, so let's just bring our overnight high. We don't know where the overnight high will be by the time price opens tomorrow, so we are just going to move overnight high and overnight low for now, for the sake of the there we go. All right, so on the chart we have the 4-hour markers, right? Previous low day down here at the bottom of the chart, overnight low. Again, we don't know where that will be by the time price opens on Thursday, but for now we'll say it's down here. And then we've got previous high day and overnight high, right? Honorable mention levels, of course, the 50% level of last year, the market maker's expected move high, and the weekly broadening formation, right? So those are all kind of levels of resistance that we've got to kind of break through. Okay, so let's say we open in the middle of the overnight range. Let's say we open right above market maker's expected move high, right? This is where the repeatable strategy comes back into play. If we open here and we push up, say we reject off of this weekly broadening formation for say, and we pull back, but we make a higher low at or above opening print, we want to look to get into calls. First target being previous high day, second target being overnight high. All right, if we push down, right, if we open here, we push down, say we bounce off an overnight low and push back up, but then we get a lower high at or below the opening print, then we want to look to get into puts. First target being overnight low, second target being previous low a day. right? So very simple. As long as you stick to the rules, yes, you may get a losing trade once in a while, but if you stick to the rules and have your stop set appropriately, you should have, minimal, if no loss at all. And then, can continue to follow the rules. If the trade is going in your direction, and the previous high day, high, overnight low, previous low day, those are very good marks out there, or targets out there for what we should be shooting for intraday. Of course, if we get past those levels, then we can turn to our 4-hour triggers and targets and our 1-day triggers and targets. Let's talk about those now. Right, so on the 4-hour, we talked about how there is a 3-2 up. Right, so we do have the risk of a 3-2 up, 2 down on the board. So just want to continue to watch price not only overnight but in the morning, especially as we approach the market open, and we'll see how close we are to the bottom of that candle. But if we're not close, then obviously we're going to get that 2 up continuation, and we gotta beat these levels of resistance right here. We do have the target of 50.19, last month's high, on the board for this week. At this point, we were looking to initially just reach this 46.79 level, but obviously we're there. So the next target at hand, from a swing perspective, like overnight swings, things of that nature, 50.19, right? That's our target for the week. Still got 2 days left, and you know how SOXL can move. Let's see, today was $2.78, so 50.19 is less than $4 away. We could definitely be there by the end of the week. But just keep in mind, we do have the 3-2 up, 2 down. That could be a possibility tomorrow morning. On the 1-day chart, for more like swings, 4 hours more intraday trading, but you can use it for swings as well. But if we want to look at overnight swings, 2-day swings, things of that nature, we definitely need to look at the day chart, and we can see again just 2 up, 2 up, 2 up, one after another. Got quite a ways to go if we are going to make a 2 up, 2 down. Magnitude for that move isn't that large, but if you are able to catch the entry somewhere in between here, say we do get a opening print that's kind of high in Wednesday's price action, and we just push down. If you can get some type of lower high or something like that below opening print and get in early, then obviously you can get this part of the move. But if you're looking at just the day chart, the 2 up, 2 down, it triggers obviously a previous low day, and the magnitude is just the low of the candle to the left of the one of the 2 up. So not a lot of magnitude there, but again, if you can catch something in here and ride it down, then obviously that's going to be quite profitable for you. Same thing with to the upside. It's just a continuation, no reversal patterns or anything like that. So just keeping an eye on these resistance levels and looking to see if we can push up to that 50.19. All right. Let's go to the notes real quick so we can just look at the hard numbers, right? So for Thursday, December 4th, there will be 18 trading days left in 2025. The close on Wednesday, December 3rd was 46.58. We know that we're in full time frame continuity to the upside, meaning the week, month, quarter, and year are green. So we do have the levels here that it would take to flip each of those red. You want to keep those definitely in mind. Just look at this level, that pullback that we had the previous 3 weeks, not last week, but the 3 weeks before, leading up to that bounce last week, bounced right off of 28.13. So it's definitely a level of inflection. Right, we talked about in the weekend video the expected move in a little bit more detail. So if you want more information on that, check out the weekend video. But it does give us that 44 to 37.08 range. And again, we talked about that the top of the range because we've been able to push above it and remain above it, close above it in today's price action. As always, we know where our gaps above and gaps below are, so those do tend to act as magnets the closer you get to them. So definitely want to keep an eye on those. And before we get to the 4 hour and day chart and things of that nature, we know that from a scalping perspective or an early entry perspective for the intraday trades, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. From a 4 hour chart perspective, again, we talked about the 3-2 up, 2 down possibility that would trigger if price goes below 45.20. The magnitude for that move is 43.15, and because it is about a $2 move, basically a 5.5% move on the day. In the face of an uptrend, we did put an intermediate target here. We could see how price could bounce, move sideways, do whatever at this particular level instead of continuing to go down. We talked about if we go to the upside, it's just a two up continuation that triggers at 46.68. We've got a target of 47.22 and an extended target of 47.97 on there for the 4 hour. On the day chart, if we go two up, two down, again, we've got to get all the way down to 43.15, but that does have a magnitude of 42.03. And should we go below 42.03, we do have an extended target for the day of 41.33. Now, if we go to the upside again, it's a two up, just like on the 4 hour, triggering at 46.68. We've got a target of 48.43 and the extended targets of 49.06 and 50.19 for the day. All right, we'll stay here. We won't go back to the charts for the week, month, quarter, and year. We already went through those charts, but on the week, we have triggered the two up, and we are in force, right? We're above 41.33. That's why this is bold and not just underlined, right? If it's just underlined, that means it's been triggered. If it's underlined and bold, that means it's in force. So we are in force on the two up because we're above 41.33. First target was 46.70 or is 46.79 for the week. We're basically there. So now looking for that 48.43 and possibly that 50.19. It'd be real nice to reach that level. For the month of December, we are green. We are inside, right? So we still do run the risk of going two up, combo two down, but we've got to get all the way down to 28.12 to trigger that. And then to trigger the two down, two up reversal, we've got to get to that 50.19 level. So that's why it would be really nice to get to that 50.19 on the week chart. That could just spill over into the next week, triggering the two down, two up on the month. Looking for the quick magnitude of 50.76. So again, not a lot of magnitude there, but it would continue the uptrend, giving us a higher low and a higher high. And we could have our extended targets, we have our extended targets listed out here as well. On the quarter, we mentioned we are in this one combo two down, combo two up because we're above 36.15. Obviously reached the first two targets that we had out there, but the magnitude for the move is 70.08, so we've got to have some intermediate targets on the way. Might have a little too many intermediate targets now because we made those in the face of a changing trend, right? The day trend had flipped to down. The week trend was getting close to making a lower low, creating a broadening formation, and so with it being the end of the year, things could have kind of stalled out and went sideways, right? We could just be digesting. We showed out on the week chart. We did make a higher low, but we've yet to make a higher high. And if we do make that lower high instead of a higher high, that would signal consolidation at that point. So we do have quite a few intermediate targets there, but they're really just stepping stones on the way to that 70.08. So I'm definitely holding for the 70.08. But these are more of just reminders of where you could see some sideways action or pullback or what we call in the strat world corrective activities before we get to that 70.08, right? So there's levels you want to know about, possible places for reversals. And again, we'll always have our levels to the upside and downside on all time frames. So if we do start to get a reversal, we'll be able to get into it and really play it the way it needs to be played. From the year chart, again, we turned around that one, two up, two down. We made the higher low, and we're just looking to close at as high as we can into the end of the year. All right. So there you have it. The triggers and targets for everything from a scalping perspective all the way up to the 1 year chart. Hope everybody enjoyed it. We tried to pack in as much information as possible without taking up too much of your time. So if you did enjoy it, go ahead and give us that thumbs up. We'd really appreciate it. Doesn't cost you anything, but it does help us out a bunch. We don't charge anything for the channel, so we would hope that it could be a nice free exchange, right? Anyways, yeah, that's what we have for the triggers and targets. We talked about the higher time frames, looked at the charts. So hope everybody got some good information from today. We'll go ahead and close the video here. We'll do it like we always do. If you're watching this Wednesday night, we hope you get some good rest tonight and wake up refreshed tomorrow. If you're watching this Thursday morning, we hope you got some good rest last night and you woke up feeling refreshed today. And we look forward to getting out there and trading with you.